Howdy, folks. Welcome to Liberty Call. Today is Tuesday, May 9th, 2023. Hope everybody's having a fantastical day out there in the interwebs. Kind of a meh day in the markets. Everything opened up down and pretty much just kind of stayed sideways the rest of the day. So all the domestic indexes here, not down terribly, but certainly not great. And let's take a quick, I see a lot of red scrolling down through the trading day for today. So anyways, if it's your first time watching Liberty Call, I'm glad you're here. Thank you very much. And please give me some thumbs up, likes, shares, subscribes, follows, all that good stuff. Hit the notification bell so that when I go live sometime after 2 o'clock Mountain Time, you can get notified and you get to hear all the genius that I spew out on a daily basis. So, all right, let's go ahead and jump into the numbers real quick. All right, Dow Jones was down 0.17%, 56 points, closed at 33,561. S&P 500 was down 0.46%, closed at 41,19. NASDAQ was down 0.63%, closed at 12,179. VIX was up 4.18% today. It's up to 1769 right now. Canada was flat at 0. Brazil was up 0.93%. Mexico was up 0.78%. Going over to Europe, Germany was flat, up 0.02. UK was down 0.18. France was down 0.59. Netherlands was down 0.57%. Let's see here. Spain down 0.31%. Italy down 0.16%. Switzerland down 0.42%. And Portugal down 0.36%. Russian exchanges both in the red again today. The MOEX down 0.42%. Oh, nope, these are closed. So let me scratch that, belay my last. Let's go ahead and move on down to the Asian markets. Starting out the Nikkei in Japan, it was up 1.01%. Australia was down 0.17%. New Zealand down 0.52%. Chinese markets almost all red. The Shanghai was down 1.1%. The Shenzhen Component down 0.9%. China A50 down 0.55%. Let's see here. DJ Shanghai down 1.03%. Hang Seng down 2.12%. And the Taiwan weighted came in up 0.18% for the day. So like I said, lots of red, nothing terrible, but looks like things are, people are just kind of waiting to see which way the market's going to go and plan accordingly. All right, let's go ahead and get through today's market recap. S&P 500 slips as PayPal chip stocks weigh. All right, the S&P 500 fell on Tuesday, weighed down by a slump in PayPal and weakness in chip stocks. PayPal shares tumbled over 11% after the payments company cut its annual transaction margin guidance as it ramps up its lower margin unbranded business led by its Braintree processing platform. The outlook on margin growth offset quarterly results that beat Wall Street estimates on both top and bottom lines. RBC expects further cost-cutting measures to help offset the pressure from unbranded volume growth, outpacing branded volume growth. Semiconductor stocks also dragged down the market on the broader tech sector after Skyworks Solutions shares slumped by 6% when the chip maker's guidance for the third quarter missed estimates due to weaker smartphone demand. Additionally, Western Digital's stock dropped 2% following quarterly results that missed analyst estimates. Planeteer Technologies was a standout performer, rallying over 23% after data analytics firm reported better than expected first quarter results and said it expected to generate a profit in each quarter this year. However, some on Wall Street remain on the sidelines, citing concerns about new government contracts. Regional banks recovered lost ground from a day earlier as PacWest Bancorp climbed by 8%, but concerns about the sector persist. Meanwhile, President Joe Biden and Republican lawmakers are set to begin talks aimed at breaking the deadlock on the debt ceiling negotiations needed to raise the federal borrowing limit and stave off a U.S. default. The debt limit for the U.S. is currently capped at $31.4 trillion, but following massive amounts of annual federal spending, U.S. government commitments have surpassed that level, prompting the need for additional debt issuance beyond the current limitation, according to Stifel. The sluggishness in the markets comes just a day after the April's consumer price index due on Wednesday, which economists expect to show an uptick in inflation for the month. Despite Planeteer's earnings beat, some on Wall Street remain cautious, citing uncertainty surrounding new government contracts. So, yeah, the thing about the whole debt limit is they could just spend less. I mean, they could cut the spending for the government by, half, and cut the parasites off and let them go get real jobs and take care of themselves, as opposed to people like me having to pay for all these government employees and the welfare recipients that don't work at all. But hey, what do I know? All right, next up, dollar range bound as markets eye U.S. debt ceiling talks and inflation data. The U.S. dollar retained moderate gains against major currencies on Tuesday as traders awaited U.S. debt ceiling negotiations and interpreted various conflicting economic data to evaluate the impact on monetary policy and global growth. A sharp contraction in Chinese imports in April from a year ago, while exports grew slower than in March, had limited impact on currencies, although it contributed to risk-off moves across markets. The closely watched U.S. inflation data due tomorrow is expected to set the tone for markets following last week's stronger than expected jobs data. The Fed's quarterly survey of bank loan officers published on Monday indicated that credit conditions for U.S. businesses and households remain tight at the start of the year, most likely due to interest rate hikes. The survey was among the first measures of sentiment in the banking sector since recent string of bank failures, starting with the collapse of Silicon Valley Bank in March. The U.S. dollar index, which measures the dollar against a basket of currencies, rose by 0.25% to 101.68, but remained close to recent lows as traders monitored a peak in U.S. rates. The euro slipped 0.41% to 109.58, while sterling was broadly steady, buying $1.2599 ahead of Thursday's central bank policy meeting. The Bank of England is poised to increase its interest rate to 4.5% in an effort to combat the highest inflation in Western Europe. The Japanese yen last traded at 135.075 per dollar, with the Bank of Japan Governor Kazuo Ude indicating that the central bank might end its yield curve control policy and begin reducing its balance sheet. However, any Federal Reserve policy changes will have to be assessed against recent turmoil in the U.S. banking sector and political impasse in Washington over raising the country's debt ceiling and avoiding a default, analysts stated. So, right now the dollar's kind of holding at its bottom range. It was, I think, in the 90s when all this stuff started with the whole Corona crap. And I was telling people at the time, hey, if the dollar goes below 90, we might be in for some real trouble. Now, little did I know that the rest of the world was going to print money at a faster rate than us, and that actually would make the dollar look better compared to the yen and the pound and all that other stuff. So, unfortunately, I don't get a little bird doesn't come and tell me what's going to happen in the future. All right, last up, U.S. small business sentiment slumps to more than a 10-year low. That can't be good. Small business confidence in the U.S. fell to its lowest level in over a decade in April as business owners became increasingly concerned about the near-term economic outlook and persistent worker shortages. The National Federation of Independent Businesses Small Business Optimism Index dropped 1.1 points to 89 even last month, the 16th consecutive month that the index has remained below the 49-year average of 98. However, there were few signs that businesses were having difficulties assessing credit. While the survey hinted at an economic slowdown, economists have cautioned against reading too much into the drop in sentiment. They argued that measures of sentiment are often a poor guide of what's likely to happen in the economy because it tells us more about how business owners are feeling rather than what they are doing. The share of owners expecting better business conditions over the next 6 months fell 2 points to a net negative 49%, a net negative 19%. Expected higher inflation adjusted sales down 4 points from March. 30% reported all their credit needs were met, up a point from their prior month. 59% said they were not interested in a loan, unchanged from March. A net 6% reported their last loan was harder to get than in previous attempts, down 3 points, while 4% reported financing was their top business problem, up 1 point from March. The Fed survey of bank loan officers published on Monday showed credit conditions for businesses and households continue tightening in the first months of the year, but this appeared to be the result of U.S. central bank's aggressive interest rate hikes, rather than the cliff-like decline in some credit some feared after the March collapses of Silicon Valley Bank and Signature Bank. Though the Fed has signaled it may pause its fastest monetary policy tightening campaign since the 1980s, the economy has yet to feel the full effects of the cumulative 500 basis points of hikes in the policy rate since March of 2022. 45% of owners reported job openings that could not fill, or up 2 points from March, with vacancies concentrated in construction and transportation. 37% of owners had vacancies for skilled workers, up 3 points from March. The government reported last week that there were 1.6 job openings for every unemployed person in March. The share of business owners reporting that inflation was their single most important problem dipped 1 point to 23% and was 14 points lower than last July's peak, which was the highest reading since the fourth quarter of 1979. About 33% of owners reported raising average selling prices, down 4 points. Government data on Wednesday is expected to show consumer prices increased strongly in April, but services costs outside of housing are forecasted to have risen moderately. All right. So it's kind of a good, bad, it's kind of medium right now. It's not too hot, it's not too cold, just kind of in the middle right now. Again, I expect things to deteriorate over the next couple of months just because, just look at the big picture. It doesn't seem to be getting any better. We're fighting over too much debt. And, the government's they just want to spend more money. They don't really care how much debt that gets pushed onto the American people because these people don't pay taxes. They work for the government. They don't pay taxes. So I know they have a federal withholding, but you can't pay taxes with tax money that was already paid to you. It just doesn't work like that. Anyways, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.